one in a short series that we're running here in 2021, and this one is hosted by our partners at Allianz and is focusing on the subject of ESG in 2021 and the subject moving into the mainstream. Now, if you've read a number of survey reports this year, including the excellent Allianz Barometer report, you will find that ESG, wherever you look, is in the news. And so this is a fantastic subject to focus on for one of our leadership series early in the programme. First of all, I'd like to address a couple of housekeeping rules, if I may. For those of you who've joined the meeting, if you can switch off your camera, unless you're one of our panelists, and mute your microphone until we get to the stage of perhaps wanting to speak. Maybe you've got a question that you pose towards the end of the session. But if for now you can turn those off, that will help both the clarity of the event and also mean that we can give the spotlight to our fantastic panel that we have here today. We are going to record this session, and so you will see at the top that it says a recording has started. However, we will only be releasing the recording of the presentations that our panelists will be giving at the first part of this session, and the Q&A will not be recorded and will be conducted under Chatham House rule. However, there will be an internal recording that Airmic take, because one of the things we're going to do after today is to provide an insights paper based on some of what we hear on the subject of ESG, and we will be publishing that later on. So that latter part of the recording is to help us make contemporary notes so that we can do just that. If you've got questions to ask, please ask them using the chat facility. This is why we're using MS Teams today. It's got an excellent chat facility, and that should help you get your views across and mean that we've got a really good dialogue. We've got a super audience today, as I've said, too, a really excellent panel. And therefore, without further ado, I'm going to pass over to our moderator for today's session. Our moderator is Steffi David-Greer, who is Regional Head of Financial Lines in the regional unit in London, Nordic and for AGS. Steffi, I think as it's okay to call you, you have a fantastic name, which is much more glamorous than that, but I know you don't mind us calling you Steffi.
Absolutely.
Steffi, I'm going to pass over to you because you're going to walk us through the session today, and therefore, without further ado, the stage is yours. Thank you very much indeed.
No, thank you, Julia, for having us and for allowing us to talk about this really key topic for us. ESG has been high on the agenda for investors for quite a while, and you know, by consequence of that, also for the boards of management of all your companies. So it's great to be able to speak about this today in this community. And we're thankful to Airmic for putting the spotlight on this issue. So today we'll be covering what we think that this community of professionals, the risk management professionals and their boards need to know, and what they need to consider this year to navigate the world of ESG. So what we will cover today with our expert panel, and I would say an outstanding panel at that, is how Allianz approaches ESG issues. So we have Michael Buch for that. We will be looking at directors and officers, ESG considerations and the risk focus. So will be Shannon Williams, and then sustainable investments with Nina Hodgick, and legal and regulatory perspectives on ESG with Silke Goldberg, who is joining us. So for Allianz, this is a really key topic, and it's at the heart of a lot of what we do. And it's been mentioned thoroughly in our reports. And so what I'd like to do today is, first of all, introduce you to our fantastic panel. So I mentioned already their names. So Michael is our Global Head of ESG and Liability Risk Consulting at Allianz Global Corporate and Specialty. He's been with us for over 20 years in different roles. He joined us in 2008 and is based in Munich. In 2014, he became the Head of Emerging Trends and ESG Business Services. And then in 2018 was appointed to Head of ESG. He was an engineer prior to working in insurance. So thank you, Michael, for being with us today. You'll be providing an overview of what Allianz does as a group to embed ESG. Nina Hodzik is ESG Integration Manager for Allianz Global Investors. So that's another unit within our group. She joined Global Investors in 2017 and is based in Frankfurt. So in her role, she leads projects in the area of ESG integration and market positioning of AGI. She also advises clients on ESG and is actively involved in setting up ESG client solutions across different asset classes. She brings over 15 years of experience in the financial industry. Prior to working with Allianz, she worked at NN Investment Partners and ING Group, and she's a member of the advisory board of Leader Exchange and a member of WBCSD's steering committee on aligning retirement assets with sustainability. So her really impressive background for us to hear about how we're managing the investment side of things. So that's another really key side to ESG in the context of insurance. So it's not only on the underwriting, but then the other flip side of that is how we're investing some of our funds and assets. So thank you for being with us today, Nina. Next, we have Shannon Williams, who is our Global Head of Financial Lines. He has close to 20 years of underwriting experience, having spent some of his time at AIG before joining AGCS. He's worked in various countries, including New Zealand, where he comes from, and Australia, South Africa, and then across Europe. He is now based in Munich and was appointed as Global Head of Financial Lines in 2019. Hi, Shannon, and thank you for being with us today. Finally, we have Silke Goldenberg, who is a partner at Herbert Smith Freehills, and she specializes in energy law. She has over 15 years of experience working in the sector, advising clients in relating to gas, power, and climate change. She's a visiting lecturer at Queen Mary University of London for international energy regulation and is also editor of the European Energy Handbook. So we have a really impressive panel that I can't wait for you to hear from, and I hope today is going to be very insightful for you and just being able to hear what they have to share with us. So I will start with the first topic, which is how ESG is managed at Allianz, and I will hand over to Michael to provide that overview, and then we will continue our discourse with Nina.
Thank you, Steffi. So hello, everyone. I hope you can hear me very well. So what I want to present you today is not only the ESG topic itself, but also how the whole story of sustainability within the Allianz Group started. Because as you've heard during the introduction, sustainability and in particular climate change, I would say is the top emerged risk already for humanity. We are in a pandemic situation, but the climate change and sustainability topic ahead of us is really one of the most critical topics. And as you all know, it's a systemic risk. It cannot be solved by individual companies or industry sectors. It needs partnerships and every stakeholder to get as fast as possible through the transition phase we are currently in to get to a more sustainable economy and world overall. I want to start with the overall corporate responsibility strategy of Allianz, which consists of three main pillars. And the first pillar is about social inclusion. I would say it's one of the oldest, shouldn't sound disrespectful. It's a very important topic, but it's coming from the philanthropy topic, and Allianz is heavily investing into that. So we are a strong supporter of the SOS villages and are supporting disadvantaged children with a focus on children and youth. and we are putting a lot of focus in particular on the areas of health, integration, and resilience. The second main topic is the topic of low carbon and carbon economy. And as I said in the introduction, so climate change is, of course, one of the outstanding topic under this pillar. And we as Allianz, as one of the largest insurers worldwide and also investors, we put a lot of efforts into that. So it has to do with the physical risks, of course, with volatility of weather extremes. We are investing into to model that more in depth, and also to help our clients to come up with loss prevention measures and to a more climate resilience economy in that respect. It's also about transitioning our economy from a carbon intensive economy to a low carbon economy. I will drill into that into more details later on as well. It has to do also with for insurers and for our clients around climate change litigation. So the liability risks, you might have heard about litigations going on around climate change, where big power utilities and oil majors are held liable for their CO2 emissions over the past years. And that of course is also a very important topic to deal with and to mitigate those risks. The second big topic on the low carbon economy is the environmental management system, which is the own operation. And when we are talking within the Allianz around that, that means our vision in that respect is to get to a 100% renewable energy power supply for all operations worldwide. We are active and operating in over 70 countries worldwide, and to get to a 100% renewable energy power supply in 2023. So a high ambition, and also, as you know, single-use plastic is a big topic we are addressing there as well. And the third topic on the low carbon economy is, of course, decarbonization. You might have heard that Allianz, during the Paris Climate Conference in 2015, committed to invest into, let's say, to divest from coal-based business models and to commit to a 1.5 degree Celsius world in the upcoming years. So our goal is also, as a big investor together with other worldwide investors under the Asset Owner Alliance, to get to a zero emissions in our investment portfolios until 2050. So that's a big stretch and for the investment side, and we are cooperating under the UN PRA principle for responsible insurance, but also under the PSI, which is the principle for sustainable insurance, to not only to do that on the investment sides, but there are also plans together with peers and under the UN to head into that direction in our underwriting portfolios. And this, I will talk about that later on a bit more into detail as well, has to do also with, could you please go back to the previous slides? Because I didn't drill into the third pillar. Thank you. So I will talk about that later on as well into more detail. So the business integration, during the introduction, we put the ESG topic as into focus, and that has all to do with integrating the thinking of environmental social governance into all our processes. So when we started the journey within Allianz, that was around 2010, when Allianz during the shareholder meetings was constantly or continuously confronted with with complaints. Why is Allianz investing or insuring hydrodams in Brazil? That was one example at that point of time where indigenous people are forced to resettle. How can you ensure gold mines where a lot of environmental pollution is linked to that? Oxfam accused Allianz in terms of that Allianz throughout their investments is responsible for hiccups in commodity prices. And the good thing at that point of time was that our board members realized, oh, there are topics which are not directly linked to our investment or insurance portfolio, but they are, of course, big topics in terms of not only our own reputation and brand recognition of Allianz, but have also an indirect impact on our investment and insurance side. And in 2014, then we started the journey. I was responsible for the insurance side to integrate in environmental social governance topics into our core underwriting processes. And on the investment side, we did the same. So the vision around that is really to embed the ESG topic into the DNA of all Allianz employees, and of course to work together with our clients and partners to push that topic forward in the future. Next slide, please. Now, being more concrete, what's going on there and what are learnings we had throughout the years when we started this journey, because that might be also a good hint to you how to integrate that into your own operations. So the first topic is sector leadership. Together with partners, peers, and also competitors under the UN umbrella of Principle for Sustainable Insurance, we developed a so-called industry ESG guide for insurance companies. So one learning we had out of that is there is a lot of external recognition around ratings. What you see in the middle here, external recognition. And we are since many years in the top ranking of the Dow Jones Sustainability Index, and there are more ratings around that ESG and sustainability topic, of course, as well. But the important thing is really to pick the right rating. So where do you want to focus? Is it on a cooperation with your peers to drive that topic forward, what we did here in the sector leadership under this UN ESG guide? Is it more, let's say, on the environmental side, the climate change topic? And there are so many ratings around, so really to pick the right one and to see where can you as a company benefit also from a cooperation under this rating expectations. The second big bucket is around excluded business and engagement. I've mentioned that Allianz decided to divest from coal-based business models. We also decided to align that with the insurance side, not to insure any longer single-site coal-fired power plants, for example. And we have some other exclusions around controversial weapons, which is a UN convention. So one learning we had around that, of course, exclusions are important, let's say, a signal that we are committed really to drive towards a 1.5 degree world, but it should be used only in exceptional cases, because the big bucket of business is in a kind of in between. So you have, of course, the green business, you have the brown business, of course, the brown business, but the ultimate goal should be to transition over the upcoming years to a more sustainable world, and therefore that can only work. That's our understanding. That can only work in partnerships and to engage with our clients how to transition jointly on that path.
So, Michael, just to step
Sure.
in on that, one question that we did have was listening to that scale and the flags that you're highlighting. Are there any companies that Allianz doesn't underwrite from an ESG point of view? So limitations such that would make us not write a business?
Yeah, like I said, so the controversial weapons is really an exclusion we have also in our underwriting principles. That means cluster munitions are banned weapons under the UN Convention, and we align, let's say, our sustainability ESG related exclusion to those globally, let's say, committed banned topics. So that's cluster munitions. And like I said, we committed also not to insure any longer single-site coal-fired power plants. And there's a pathway that's, I would say, it's the good thing, going from, let's say, strict exclusions, which should work immediately for individual topics, but then to show also a roadmap to what we decided within Allianz to phase out coal-based business models until 2040 down to zero. And that means we have a kind of pathway by saying in 2023 we only want to insure and invest into companies which have a limited, let's say, engagement into coal-based business models, and to phase that out over the years.
Of course, and that of course translates currently into maybe more exclusions or different terms and conditions that we are affording to certain sectors. Correct?
Yeah, that's correct. But overall, like I said, exclusion should be an exception because at the end of the day, the risk won't go away. So it should be the right balance between the commitment we all have, not to support, let's say, non-sustainable business anymore, but also to help our clients to transition now over the upcoming years. Because let's face it, the next 10 years are the most critical years to get this transition really done.
Exactly. And what do you think the critical success factors for a good implementation of ESG looks like in a company's strategy? If you could share that with us.
Sure. I would say what we've learned from our pathway was it needs a strong commitment from the top management, from the board, from the board level. So what we have done within Allianz is we implemented very early an own ESG board, so that all, let's say, important group centers are really committed to this sustainable and ESG integration topic, including targets for the top management and of course top down, and then translated that into execution. And of course, to integrate it into critical processes. So enterprise risk management is a very important function, of course, where you should integrate this sustainability and ESG risk topics and into all your processes in terms of business operations. Because what we are seeing with many industry sectors of our client community, take the power utilities, who are heavily confronted in terms of transitioning their own business models into a more green energy related power supply. That's of course a huge challenge. So therefore ESG and sustainability has a high impact on all functions within the company.
No, absolutely. Thank you. That's Michael. That's a really good framework to start introducing this topic, and we've heard you talk about some key words there about learnings, about the industry guidelines, about the sort of litigation that certain industries can expect, and how this is a systemic risk. And that leads us on quite nicely to the next panelist, Shanna Williams, to talk about underwriting more specifically and the very delicate topic of the directors and officers' exposures. So, Shanna, would you like to share with us your thoughts about that?
Absolutely. Thank you, Steffi. Thank you, Julia, and everyone for joining us this afternoon. So I will, as Steffi said, I will look at the ESG topic a little bit through a different lens, which is specifically the boardroom, and then obviously highly pertinent for myself and Steffi as D&O underwriters, what that also means in terms of liability for the board of directors. So the slide in front of us is just meant to show, the broad range of topics we have on ESG. This list is not exhaustive, obviously, and I think it's very important to note there's a lot of overlap here. If you think about diversity in a company, there's governance around that, there's social impact around that. If you look at some particularly large ESG topics and lawsuits quite close to home here in Germany around the Volkswagen scandal, you've got governance playing through. You've also got obviously social impact in terms of customers of vehicles, and obviously the pollution side on the E. So there is a true interlocking there of the different factors as well. Very important for us too on the underwriting is I think many of you are aware, the D&O insurance market has taken some challenges in the last few years, particularly with the claims frequency and severity. And one of the reasons behind that is there's been a big shift in the claims from what were traditionally financial statement related litigation, so bankruptcies, financial fraud, to what we term in the industry event driven litigation. And event driven litigation really is bad news litigation. And of course, the ESG topic is, if not handled appropriately by the board, disclosed appropriately by the board, bad news for the market, bad news for the share price, bad news for regulators, and hence it's definitely a big emerging D&O risk for us as underwriters in the community. And these are not new risks. These risks are permeating through all businesses. The real question is now, how do they manifest in terms of liability? And later today you'll hear a legal viewpoint on that. But the fact is they will now come up. There's lots of legislation evolving. Regulators are obviously more active, and of course all other stakeholders. If on the right hand side there, obviously I've tried to pull kind of the way the board obviously needs to think about this. Obviously strategy is the DNA of everything of the board, and that's also links to something that I know Julia is passionate around corporate purpose and sustainability of the company, and the statements they make around that. ESG is intricately linked to that part of the vision statement of the company. And of course there's short-term and long-term measures and progress that can make. If you look at gender pay gap, of course there are things you can do quickly to close gender pay disparity, but in the longer term there's a lot of work to be done. What was the underlying causation of some of those topics that led to that in the first place? Risk, I don't need to talk to the audience here as risk professionals, but obviously elevating, identifying these ESG risks through the various committees and risk registers you have, and making sure that it's understood how they will play out through into the boardroom. And of course, then how that is disclosed. You have now various disclosure regimes coming in, particularly in US and Australia related to securities, but also how you disclose that to the wider community, to your employees, and of course to the media, which, as we well know, can have a devastating impact on reputation. So if we could move to the next slide, please. So as this slide here is just some examples of what is going on. So in 2020, just looking at the first bullet point, there was a big uptick, particularly in the US, on board diversity litigation. So really alleging the fiduciary duty of the board of directors was failed, and not having the correct diversity on the board. Obviously, there's a lot of data and proof around the aspects of diversity, bringing better risk management to a board and bringing those different lenses to the business. That certainly started in California. So a lot of Californian technology companies have faced litigation. Oracle's one of the big high profile ones you can read about in the press. But I think certainly this is a topic that is going to expand, that again, in terms of governance, that board diversity, board composition is adequate to manage risk. Pollution and environmental, you'll see many times when there is a disaster, a natural disaster, take the San Marco disaster in South America, and the dam collapses there. Again, what we would call event-driven, bad news, and the board of directors get pulled into that they didn't have the adequate risk management, or they didn't have the risks of those dams on their radar enough. So that's certainly a topic that's been around and will continue. Climate change, the big one, a difficult one for D&O, given the timeline there. The most of the litigation at the moment has been around the disclosure of the risk. Failing to adequately disclose those material risks of climate change. You've seen some lawsuits related to the wildfires in the US, where companies didn't disclose the change in the environment, which was leading to obviously more activity in the wildfire and how that affected their business. Obviously, as an insurance company, climate change is having a huge impact on the frequency and severity of natural catastrophes, and an important piece for us too, that we work, as Michael said, to model that more, address that more, and disclose that to the market. Greenwashing, I'm not sure if everyone is aware of that. This is a phenomenon where companies are kind of dressing up a little bit what they're doing, so making nice media, making nice representations of what they're doing that is green and relevant to this topic. But when you get underneath the covers, there's not a lot happening there, and there is actually some litigation around that. The FCA actually in the UK has given some guidance recently around greenwashing. So just to show that there is plenty happening there. There's also a picture on the northeast quadrant there around the CEO pay. Another very interesting topic, particularly from an investor angle. We have Nina speaking, but for example, the Norwegian sovereign fund, one of the biggest funds in the world, close to 1 trillion, has come out, and they will be having a lot more active stewardship around their investments and looking particularly at executive pay. Next slide. And actually, before I get on that one, Steffi, I'll go back to your comment on how we actually exclude or pass on clients. I think Michael talked more broadly on industries like coal, but certainly when we underwrite, we definitely have examples where we have not insured companies. We had one recently, a company that did have some perennial environmental and pollution topics. We did engage with them, with Michael's team, to see how they would address that, and in the end we decided to pass on their insurance. So there is also a process on a risk by risk basis that we assess that and factor that into our decision making of taking the risk.
Absolutely. And I think, Shannon, a question just come up from the audience as well, a bit of a flip side to that, which is how do we encourage and promote the adoption of ESG and attract new customers via improved coverage, or is there an ESG percentage discount factor? I'm sure this is someone who's been burned by some D&O increases in recent times. So personally, I haven't seen that, but have you sort of seen that happening in any other area of the world?
Great question, and actually very timely, because Michael will touch on it later. I think ESG, we also do think about it as a business opportunity, and actually we are going to start looking, in innovative ways. How, are there products around this? Mm-hmm. The services that, Michael has a big team. This is what they do. Can we turn some of that best practice and put it back to our clients, and rather than saying, we're not happy with this, go back to them and say, look, this is the best practice we're seeing in your industry. So I think certainly from a service point of view, we will do so. And a lovely segue to the next slide, actually, is on the data side. There's a lot of data out there around ESG, and if you look at the laptop on the right, we actually are now using data in our D&O underwriting. We've partnered with a company. We have statistically modeled a lot of the ESG data points against claims and public litigation, and we do see some predictive power there. So certainly we will be looking at ESG risk as part of the underwriting process. And if you want to, the term rewarding, I think, is fair in terms of giving coverage. Giving more coverage, that will be an important part. And actually, I can see some friendly names on the list here of some clients in tough industries where we have continued to insure them, and a conversation with that client was a lot around ESG related topics rather than financial topics. So certainly, yeah, more to come here from us. Michael and I would love to turn this from an internal underwriting model into also a risk service model to our clients, where we can take this data and share, because at the end of the day, we all want the same thing, which is improved
Absolutely.
ESG risk management.
And Shannon, just to touch on another hot topic this year, cyber resilience and security. Could you just share with us a bit more how boards can improve their profile, or what they need to do here in your view?
Very hot topic. And yes, there's a lot of studies out there showing, and some show that cyber resilience is by far the highest ESG related topic, particularly in terms of sustainability of the business. I certainly know in Nina's area, it's an very important investment decision on what is the cyber resilience and posture of a company before investing in it. And also obviously on the M&A side, that's a very important decision now, before companies make an acquisition, to make sure that cybersecurity is robust. So again, a big governance topic, making sure that is at the board level, cyber risk, that those processes are in place to monitor cyber risk. The main complaint from the investment community is transparency. It's hard to understand a company's cyber risk, and companies, for various reasons, have been slightly hesitant to give a lot of transparency on that, but I certainly think the ones that do get a better return. And then, of course, with COVID and more digital, this is becoming a particular topic in our times as well.
Absolutely. No, and thanks, Shannon. That's really insightful, hearing about the specific underwriting concerns that we have on our mind, and how we've dealt with them. You spoke about litigation and disclosures, climate change and greenwashing, all very relevant topics. And then finally, to wrap that up, sort of how we can be on a positive note, providing support and services to our clients, which is really insightful. So there'll be an opportunity for more questions, of course, at the end. So right now, I wanted to thank Shannon for his part, and just move on to the next part of this. So when we think about ESG within the insurance sector, one side, of course, is the underwriting. So the clients, the risks that we select to have in our portfolio, and what that does to our own ESG rating. And then the flip side of that, which is the investments that we make through, for example, Allianz Global Investors, mergers and acquisitions. And Nina will be sharing with us a bit more information and framework on that. Thank you, Nina.
Thank you, Steffi, and good afternoon, everyone from Frankfurt. So as already explained a bit, so we are a global active asset manager, managing assets on behalf of our parent company, but also other institutional and retail clients. So we strongly believe that incorporating ESG factors in our investment process makes us a better informed investor, which enables us to generate returns and also create long-term value for the society. So as you can see here on this slide, we began our sustainable investment journey over 20 years ago. And here are some of the highlights on the timeline, such as the launch of our first sustainable equity strategy back in 1999. Then we had the launch of our green bond strategy, 2015. And really the latest, this one is a climate engagement with outcomes, so this year. So we are also very pleased by the external recognition of our efforts in sustainable investment area, such as by the PRI Association, and also high score that we receive in various rankings by consultants and NGOs. So if we could move on to the next slide, please. So we have a very diverse client base. So clients with really different sustainability objectives. And therefore, we also tailor our sustainable investment offering really to meet those various client needs. So what we have done is, we have those 4 really distinct sustainable categories that we have categorized our funds into. So the first one is what we call integrated ESG. So the focus there is really on financially material ESG risks without constraining investment universe. The second one is our sustainable fund range, focus on values, so really excluding, for example, companies with controversial activities or behavior. This could be tobacco, weapons, human rights violations, etc. So this one is really about reputational risk protection. Then the third category we have are our SDG aligned funds. And here, really the focus is on aligning the investments with 1 or more sustainable development goals. And then we have the last category, which really goes a step further. So here are then the various investments we make where it is possible for us actually to measure the environmental and social impact. So a few examples of that are, for example, our green bond strategy in our renewable energy funds. And as you can also see on this slide, the engagement that we do in proxy voting is really across all the funds that we manage. So if we could please move on to the next one. So active stewardship is also an important element of our investment approach. So I won't go into details on all of those figures and statistics, but just to give you a short overview. So what we have noticed over the past, well, let's say roughly 5 years, that companies have really become more transparent and responsive. They are very curious to hear our feedback, our views, what are also the best practices that we see in their industries, and what are our expectations. So internally, we have a joint engagement strategy, with which we mean that our ESG analysts, our portfolio managers, and also our mainstream sector analysts, both on the equity and fixed income side, jointly engage with companies, as we find it really important to speak with one voice. So we speak to company management, but of course also to board directors. And we also conduct collaborative engagement. So together with our peers, as we find it also a very effective way to enact change. So a few topics that Shanil, of course, also mentioned, that are important to us that we engage companies on are corporate governance, unsurprisingly, but also climate change, diversity, and cybersecurity. And we do that across all the sectors. And on proxy voting, that you can see on the right-hand side of this slide. So we have a very transparent approach there. Also a dashboard available on our website where anyone can see how we voted at various AGMs. So we also frequently vote actually against management proposals. The ones obviously that do not meet our expectations. So just to give you a few examples, so if there is a poor link between the remuneration and performance, or for example, a lack of transparency in the KPIs. And of course, another topic, board independence and overboarding. So if we could move on to the next slide, please, thank you. So yeah, a few years ago, I decided together with a board director to set up an investor director ESG working group. As you know, at that time, nothing like that existed. And I think currently doesn't exist either. So we thought that it was, in general, there was quite a good dialogue between investors and company managements, but not yet between investors and board directors, and especially not on ESG topics. So we set up this working group end of 2017, and which comprised 6 investors and 6 directors. We met twice a year, and of course also had regular calls, and the objective for us was really to go beyond sharing best practices, but really work on something tangible. And therefore we developed an ESG roadmap, and here you can see the visual in the 5 different areas. So you would see purpose and commitment to act, then you see, I need to see, the letters are a little bit small on, I think, transparency and disclosure is the last one. So we have accountability and incentivization and engagement and proxy voting. So, and then just here, you know, the one that I highlighted, engagement and proxy voting. So you just get a better idea. So it's really about the three different groups, so board of directors, management and investors. And, you know, what are the different steps that they could take in terms of establishing principles and policies and who should be engaging with whom. If we could please move on to the next slide. And then, of course, we were also very eager to conduct a survey among a larger group of investors and directors to really see if the findings that we had amongst ourselves within the working group would also be supported by the findings of such a global survey. So we partnered with Columbia University, and the focus was really on climate risk management. So we had more than 130 respondents. And the questions were really along those 5 different topics that we've seen in the ESG roadmap. So just to show you those two charts, so some of those findings. So the first one, which you see, is a survey question that we had for both investors and directors. So how important do you consider reporting by companies on climate risk compared to reporting on financial information? And what you see here is that more than 70% of investors and more than 60% of directors said it's equally important. So we were very pleased with this outcome. And then another finding I wanted to share with you is a question we had for the directors, which was in the companies on whose boards you serve, who is primarily responsible for collecting information on climate risks and opportunities and reporting it to the board. So here, as you can see, the biggest portion was head of corporate social responsibility. I think not that surprising, but then we had, you know, a very, very low percentage of board directors who said investor relations team. So they're not getting any ESG information from them. And more than 20% of directors indicated that nobody reports to the board on ESG topics. And this was of course, quite a striking one. So I think a lot of work to be done here. We, of course, also looked at, you know, variation in gender, age, and region of the various respondents. And in general, what we saw in this survey is that female respondents, the younger respondents, and our European respondents were more interested in climate topic and willing to take action. So for those of you who are interested to see the report, I've also included a link there. And I think, you know, in general, the conclusion is really, we need to work better together. I think support more diversity, and this was already mentioned before. And, you know, because this will really be a key to accelerate positive change on the climate topic, but of course also ESG more broadly.
Absolutely, and thanks, Nina, for that. So much work has gone into this, so thoughtful and insightful to see, you know, this powerful data being collected and presented to help help us assess this ESG profile. So I just wanted to I have a few questions from the audience. So one of them is about how does AGI ensure that companies and boards say what they're doing is actually what they're doing? A bit what Shannon referred to earlier in terms of greenwashing.
Yeah.
And I know proxy voting is definitely one of the tools that we have at hand, but any other tool that we have, sort of a bit of a carrot and stick that we use to verify that?
Yeah, so I think by now, you know, there are so many different data providers, also ESG rating agencies. So we really have a lot of sources to look into. And then, of course, engage with those companies. So really where we think there is any kind of discrepancy of information that we see, or a company, for example, maybe lagging behind best practices in the industry, etc., we would really dig into details and engage, ask for additional information, etc. So, of course, it's not always that easy to detect the greenwashing, but we really try to do our best. And the engagement, we do that on a continuous basis. And as I mentioned, also by various colleagues, so not just the ESG specialists, but also PMs and across the globe. And we have also a platform, internally digital platform, where we really share the information across all of our colleagues, investors around the world, and summary of engagements, things that we have discussed, the various topics with companies. So it's very easy for our colleagues, for example, in Asia, to check what a certain company has mentioned in Europe in the same sector, so they could also ask particular questions.
Yeah, absolutely. And sort of still staying on that topic, do you think there's a way, how do you get the boards to be more accountable and take ownership for the ESG topic? Is we've heard about the Allianz SC board sort of having where each member has responsibility. Have you seen that happening widely? Is it something that's a growing phenomenon?
Yeah. So I think what we have seen, some boards have also a dedicated CSR, so a sustainability committee in place. Yeah. Others don't. I think it is particularly valuable for companies that are especially at an early stage of embracing ESG, and where still a lot needs to be done to have such a committee in place. But of course, we also see other companies that might be already sustainability leaders in their industry. So I think it's not always necessarily the case that you need to have a dedicated sustainability committee. Yeah. What I would say is really important is that ESG is on the agenda of the full board a few times per year. So that all board members really proactively receive the relevant ESG information. And this could be findings, for example, from the internal audit, ESG rating reports from various data providers, and get, for example, also access to internal and external trainings and resources, because I think that will really enable all board members to build up a basic ESG expertise.
Absolutely. Thank you, Nina. That was really insightful and informative, and I think everyone has found it interesting to hear about the categories of the funds and the survey data that you've collected, which is really powerful. So thank you, Nina. And the next speaker on our panel is Silke, who will be speaking to us about how the regulatory framework and the legal framework impacts ESG and what's the direction of travel in that sense. So thank you, Silke, for joining us.
Hello, good afternoon, and guten Tag here. So there are a couple of colleagues who've joined from Germany as well. So what I'm going to talk about is about the regulatory direction of travel in relation to ESG. Nina, you couldn't see me when you were speaking, but I was nodding vigorously when you were talking about how sort of where ESG and climate change should be housed in terms of board attention and sustainability committee and board. So I'm going to Steffi, if you allow me, I will offer some legal reflections on what I've heard in the first part of the discussion as well.
Absolutely, thank you.
Because there's some really interesting themes coming out here. So taking a step back, so what do legal frameworks really do? Legal frameworks, and they're, in the industry, there are many, very often voluntary frameworks. There is no global standardized ESG or reporting or benchmark requirement as such. So as I will show in a couple of slides later, there are many different standards, and they could probably, from a strictly legal perspective, be classified as soft law. But these soft law frameworks have very real hard law consequences, and increasingly these soft law frameworks, voluntary standards, are being translated into hard law and find more global, sort of more national as well as international acceptance. We have counted, and I think we've found over 170 ESG related regulatory measures, and they can be at national level, they can be at European Union level. The European Union in this regard has a very particular role And in relation to the UK, will continue to do so even after Brexit. I think it's important to say. Europe has developed probably one of the most advanced ESG mandatory frameworks, in particular when it comes to transparency, reporting and disclosure. So these are really the core tenets of European Union standards in this regard. However, there are other standards, and that continues to evolve. What I have on the slide here is just a snapshot of some of the standards that are applicable across different industries. So many of you will be familiar with at least some of these standards from your work in risk and ESG. So it's not necessarily a surprise. However, what may be a surprise is just how many they are and how little they overlap. So very often these standards come with very specific questionnaires or very specific scopes, which may not necessarily overlap, or they ask for similar things. And from my own practice, I've had clients say, we want to do a sustainability report. We really want to report. We're not obliged, but we want to do this. According to which standard are we doing it? That is one question very often. At the same time, and I think it was Chanel who sort of mentioned ESG and climate change risk in this regard and litigation. At the same time, very often the companies I'm speaking to saying, when we disclose, is it better to disclose or is it better not to disclose? Where is the greater risk? So disclosure and transparency is an important risk management tool for companies as well. We have over time, we have helped more and more companies putting together sustainability disclosure reports and as well climate change reports. And I've noticed in the discussions we had a bit of a focus on climate change and climate change risk and litigation. And I think that reflects the current focus. ESG, of course, is much broader. Ranging from social mobility, diversity, business and human rights, sustainable and social investment. But I think in the public perception and in the perception of the companies in particular, let's say in energy and in the energy and infrastructure sectors, climate change is very much at the forefront of people's consciousness, I think. Moving on from the different standards that are about and against which companies might choose to disclose, on this particular slide, I've tried to put together a snapshot of the journey from a voluntary regime to a more regulated and compulsory regime for disclosure and for transparency. And there's an international push towards more transparency, disclosure. So, for instance, in France, there is now in 2016 a new law was introduced which obligated investors to disclose how precisely ESG risks are factored into investment decisions, which is interesting. In the UK, there are similar moves in the UK Stewardship Code, not quite a law, but quite similar to that. In the Shareholder Rights Directive at European Union level, there are a number of elements that are worthy of to mention here. So, because this Shareholder Rights Directive promotes long-term shareholder engagement. So, in particular, of remuneration issues, which was mentioned previously. I think it was again Chanel, and it was also Nina, you both mentioned this. And what in relation to climate change risk and ESG, what we see increasingly is companies choosing to link CEO or director level remuneration to climate change or ESG related targets. So for instance, greenhouse gas reduction or achievements of progress in that regard being linked to directors' remuneration, which is quite interesting. In the EU, of course, there's also the non-financial reporting directive, obligating companies who captured or caught under that directive to report on a wide variety of risks and ESG-related metrics. And companies who are captured by that particular directive do this reporting as usual in their annual reports. That was this is sort of up to now what has happened. Last year, the whole ESG sustainability agenda really got a massive push when the European Union decided to publish the EU taxonomy and address the whole question of ESG and what is actually ESG and how can we avoid the allegations around greenwashing in the industry for investors and for directors. So the EU taxonomy is pulling together a category of investments, either directly in assets or in financial derivatives based on those assets, which can be counted as sustainable and green, and what does not count, which is it's the first time ever that at a legally binding level that distinction has been drawn. And as you can expect, there was quite a lot of political debate around that, because as soon as you go out and actually decide that a certain asset might not be green or might have specific disadvantages under a directive, it will influence investor decisions, and therefore it is seen as potentially quite political. So on the slide, I'm not going to go through this in a lot of detail. You can see the different asset classes and the types of investment that will going forward be counted as green and sustainable investments, and elements which will not count as such. So this is I think the first time ever I said that this has been put into law. And yesterday, I think it was yesterday or the day before, ISS announced that it will adopt a similar standard based on the European Union taxonomy. And this is why European Union law will have an influence on the UK post-Brexit as well, because European Union standards tend to radiate beyond the EU member states themselves, and very often, I often explain it by way, it's perhaps not fully appropriate in pandemic times, but environmental law is contagious. So as soon as one regulator starts to establish certain standards, other regulators have a look in and say, okay, so how can we adopt this in our own home jurisdiction? And there's a cross-fertilization. So the likelihood that the EU taxonomy will be applied not only in the European Union, but beyond that is quite likely. And sort of now moving away from the pure slides, perhaps, sort of reflecting on sort of where does this leave us? We have a journey that runs from much more very diverse voluntary standards to more specific standards enshrined in national, French, UK, Spanish, or European Union law standards. I think ultimately there will be influence on how companies invest. It will also direct money flows, because the companies or the funds with whom I work and who would like to invest in the energy and infrastructure sectors are looking quite closely. Does the particular asset fit within the taxonomy? Does it fit within the ESG strategy of that particular company? And how can we report it, and what do our shareholders think about that? So investment decisions are definitely increasingly driven by this, but also risk management becomes important. Chanel mentioned climate change litigation. ESG litigation is just as high of risk. It's not just in relation to climate change, but certainly that's an important factor. And one element that has been alluded to is that of directors' duties. So it came out in the DNO risk management tools that the previous speakers were referencing. Directors' duties in any jurisdiction have become under increased scrutiny, and will come under increased scrutiny as a result of tightening regulatory frameworks. So questions where who is responsible for ESG in the board, who is responsible for climate change, will not just be a matter of nice to have, but it will be an absolutely essential point in order to make sure that directors' duties are adequately fulfilled. This is not to say that this is all going to be become horribly legalized, but I think it moves the ESG and climate change question much more to the center and to the heart of company decision making. And I think that will be one of the consequences of this legal journey. I'm going to pause here for further questions.
Thank you, Silke. And I guess just, this, what you've illustrated really well, what sounds like a very complex and torturous framework. But do you have any recommendations or advice for directors and companies on how to prepare for compliance to these new disclosure regimes?
One of the most important things is for companies to look inward first, to almost do an internal due diligence. So how is our decision-making process? Are there any areas of risk? We have accompanied one international company in the extractive industry and energy industry in a very big strategic project in relation to this, and they looked at do we have any data internally that might be difficult, but also what have we said externally, knowing what we've said internally. So climate change litigation can arise, the litigation risk increases the more there is a discrepancy between what a company says internally and what a company says externally, and then even further to the extent to which any public statements or results of a company and actions of a company might contravene a legally binding framework. So the first step is what's going on within the company, engaging with the subject matter. So if it's not enough to have a speaker once in a while at a board meeting and then not integrate and not have the relevant expertise within the board. To train up your boards, to make sure that if you have a sustainability committee, that is properly embedded in the decision making. It's not enough just to have a sustainability committee. Certainly, from a UK director's duties perspective, it's important to demonstrate that the board has appropriate skills, and also that the board, where it doesn't have the appropriate skills, has made themselves available of those skills, perhaps through external experts or something like that. So lots of things that can be done.
Absolutely. So yeah, that's really good advice, Silke, and thank you for taking us through that and for all your insights on that framework, which goes beyond just establishing tick boxes. It's really about understanding where the taxonomy comes into play and where the different frameworks overlap and don't overlap, more importantly, from what we understand. So we have reached the end of the panel speakers actually presenting, but I will continue with some of the questions. We've had a lot of questions from the audience, so thank you all for engaging with this. One of the questions that's come up, and I wanted maybe to call on Shanel to give us his views, is the impact of the pandemic of COVID on how and how we see that going forward, and because of the way that capex and their investments are going to be employed, and how that's going to maybe impact the future of ESG in those companies, and just a few more considerations on the pandemic effects.
Sure, no problem, Steffi. Great question. Many answers. I think I would start by saying, a good crisis is the real test of governance. So in some ways, the pandemic on the G side has been obviously a huge learning experience, with board having, to take over a lot of the crisis management. So I think, there's some benefits there. On the environmental, I mean, yes, there's a positive and a negative. Obviously, with the demand dropping, there's a big benefit probably in 2020 on the emission side, but that does ask the question, is that sustainable? When will companies, with the lack of cash flow, as the participant asked, then have the money to keep the investments up in that area? I think there's a big question mark. And of course, the social, the S, has had a huge impact from people, whether it's different generations being impacted. There's a lot of literature, taking a few steps back on gender diversity because of the working from home having a tougher impact on gender. So I think, yeah, it's a big eye opener for the ESG topic. I think it's certainly raised the awareness because it's hit all elements of the three letters, and I certainly hope it is a catalyst to push forward. But in the short term, it's actually caused a lot of challenges and perhaps even steps back on a couple of the elements.
Absolutely, I couldn't agree more. There's brought into focus quite a lot of those topics. And maybe thank you, Shannon. I wanted to just bring in Michael again to help answer another question that's come in about board evaluations. So are you seeing companies conduct more of these? And there's a question about the fact that they might be expensive and hard to complete appropriately. I think this also brings in another topic, which I might ask Nina to answer on actual audits and how internal and external audits are conducted and how they're then embedded into companies. So that's just a split question. I don't know who wants to start, maybe Michael, with the broader topic of board evaluations.
Yeah, of course, it's a very good question, and I can speak for myself, because we went through 2 audits at the very first beginning when we started to implement the ESG topics into our processes, and then just recently. So what we could see as a kind of evolution of this audit requirement was it expanded much more to an end-to-end evaluation. And I think that's a very positive challenge we are seeing there. So really to think through, not in terms of like what we've seen in the past, to individual departments or organizational structures, but really go through the process from end to end. So if an underwriter brings up a referral on ESG side, how does it come to us to assess that? How is that translated into the final underwriting decision? Are there escalations into the boardroom? And that relates more than, I think, to the board evaluation question. What I said at the beginning, I think the board commitment is a very, very important factor. That it's really top-down approach from the board down to the individual organizational departments, and to evaluate that. I'm not sure if I understand board evaluation in the right way. So what we are seeing is that rating agencies are having a very strong focus on, let's say, the board structure, the targets related to the board members, and that's what we are seeing from year to year. It's getting more, let's say, in a kind of way, stricter and more challenging. But I would still say it's challenging in a positive way to embed really the topic into all processes wherever you can.
Yeah, absolutely. And thank you, Michael, for that. And Nina, so on the topic of audits and how those are embedded or those are considered by the board, do you have some thoughts you would like to share with us?
Yeah, sure, I can share a few things. So, there are obviously, I would say, external auditors who have expertise in the ESG area, and internal audit functions, of course, are also more getting up to speed on this topic. So, yeah, I think in any case, it's important, as I mentioned also earlier, to make the relevant information available to the board, as it also really provides them an objective view on how ESG is incorporated in company strategy, the processes across different business units, what the challenges are, what should be improved. And I think it's also a good way for board to monitor progress over time. Maybe also going back to the question around the board effectiveness and board evaluation. I saw also related to that whether that is quite expensive. So I wouldn't know what something like that costs, but we have definitely seen that the number of those board evaluation is increasing when we engage with companies. More companies are also providing information, for example, in their skills matrix. Mm-hmm. And I think quite a few boards also do this kind of an internal board evaluation, where the various board directors, would score each other. So that would also be a good way, in my view, to start. So at least to have an internal view on that.
Mm-hmm. Absolutely. And so another question, Nina, for you that's come in is when we think about the way that we are doing our investment selection and with an active asset management approach, the question is, do you foresee an operational or behavior change on the corporate life, non-life insurance side, where Allianz will be actively pursuing customers with externally recognized positive ESG ratings? So sort of the ultimate vision that you've highlighted earlier, and how long will it take to get there, and how extreme will it be, in a sense, I guess the question is.
Yes, I think I can't really speak about the the insurance side. So I don't know if maybe Shanil or Michael would have a view on this particularly.
Michael, do you want to give us your views? Your audio must be off.
Sorry, I'm unmuted now. Of course, I can take that up. Like Shanil outlined already into that direction. So we see actually two elements around the ESG, using that not only in the respect of own governance issues, but also on the, let's say, under the umbrella of the business opportunity side. And that has also, again, two elements. So one is to use our expertise on the ESG side as a kind of service towards the clients, how to improve their own organization on the ESG performance. And the other element is, of course, to use external non-financial data, and ESG is a very good example for that, and to use that for better underwriting and risk assessments in a more predictive way. So we started that journey very early to see, is there a cause and effect chain between a good ESG performance in a specific area and a good insurance risk for a specific line of business. And we could demonstrate that relation. And of course, that helps to do a better underwriting, but also to show to the clients what are elements where they can improve with their own internal enterprise risk management. If that always translates then in a kind of discount, I would be a little bit careful, because this ESG assessment will not substitute the risk assessment, the technical risk assessment we are doing in a daily for underwriting and for our clients. But it's of course a supplementary element to the risk assessment. And therefore, coming back to the question itself, will it be actively pursuing customers with externally recognized positive ESG ratings? Of course, it will have an impact on the final underwriting decision. But like I said, it's not the one and only element. It will help, of course, to improve overall and to give more transparency on those elements as well.
Thanks, Michael. And there's some good points there. And I think just as we conclude this session, or getting to the end, that's time's really flown by. There was a final topic that I think would be interesting for us to cover, because within insurance, it's of course ESG is a topic of interest, not just for insurers but reinsurers as well, and brokers. And I guess this is more questions for Shanil, who interacts more with the brokers probably than the other panelists. But have you seen this topic being relevant within the broking groups, and how has that translated in your area?
Yes, it's emerging, I would say. I mean, as many of you will know, we've put out quite a number of publications recently on the link ESG and D&O insurance. I think many of the broking firms do have consulting arms as well, and obviously are providing some services to their clients. But certainly we're being asked, as Michael said, as we start to mine the data and assess a better risk, if I can say that, from an ESG lens, that we definitely are talking to brokers about sharing that. The brokers are certainly joining some of the calls that we're having with clients, where we do convey some of our concerns around the particular topics. So yeah, I haven't seen it probably as prevalent as the insurer side, but certainly I think it's going to be a topic for them that as well, in terms of the advice they give to their clients, and obviously the coverage they have that is going to address, you know, the changing legal environment that Silke pointed out as well.
Absolutely. And so yeah, and that kind of brings us to the end of this discussion, and I just wanted to maybe wrap it up by thanking all of you for your interventions, and maybe a final comment by Michael. If there was one thing that you'd like our audience today to take away, what would that be?
Yeah, if I'm trying to put it in a nutshell, it's really let's join forces to work on that topic, because it's like I said at the beginning, the top challenge for humankind, and therefore I'm very positive if we join forces to work on that in a positive way.
Absolutely. So the partnership approach is valid both in this context and in a series of other contexts now in this market. So so thank you all for joining us. I hope the audience have enjoyed listening to all your insights. And Julia, if you wanted to just conclude the session, thank you for having us, of course.
Thank you very much indeed, Steffi. Super moderation of the session. Thank you very much. You're quite right. It has flown by. I'd like to just take a couple of minutes to thank you and our panel of Michael, Shanil, Nina and Silke. We've been very fortunate to have a brilliant team of experts lined up today. So thank you very much indeed, all of you, for being here. And our attendees today, we've had a great attendance, some excellent questions. I know one of my colleagues has been busily writing down a lot of the observations, because we will be producing an insight paper from most of these roundtables, and today is no exception. So we will be publishing that. So please look out for that in the next week or two. I won't say tomorrow, because I don't want to give him heart failure. Shortly, I will say. So please do look out for that. You know, one of the things I sort of leave you with an observation on, we talked a lot about boards and controls and managing risk. And what we, I think, have to be careful of is that managing risk doesn't stop a opportunity. It's incredibly easy, I think, in the world that we live in at the moment to sort of focus on the risk. But it's often the organisations that have got that gift of being able to balance focusing on risk with the release of opportunity. And of course, ESG, to organisations who get their arms around this and manage it well, has a host of opportunities to seize. We're very mindful at Airmic that it is a balanced world and not just about prevention. The other thing I wanted to mention is that we will be running other roundtables for the leadership group. These are by invitation, and I make no apology for that, because we like these to be relatively small groups so that we can get the questions answered and tabled. Then one of the next ones is going to be on the sharing economy, which I think will be an interesting subject. And the other thing I will guarantee is that we will have a series of roundtables coming up looking at the whole issue of sustainability through different lenses. We've covered ESG today, but there will be others looking at different subjects, and we'll have 2 or 3 others coming along, so that we almost have a little series within a series of subjects that, after all, are attracting a huge amount of attention and will continue to do so this year. One other final date for your diary, 4th of February next week. Shockingly, we're already into February next week. We will be running at 11 o'clock a session on the latest World Economic Forum Global Risk Report, and an email about that has gone out today. So do come along and support that session. And I can tell you on the 17th of February, for those with diaries and minds that can stretch that far, then we have a session on the Edelman Trust Barometer. Both the World Economic Forum and the Edelman Trust Barometer focus on some of the issues that we've been talking about today, which is why I mentioned them both. So just make a note of those dates in your diary. So without further ado, again, I'd like to thank our speakers for today and wish everyone a great day. and thank you very much indeed. We will make the slides available, and we will make the presentation part of today's session available, albeit not the Q&A. I just stress again that only that first part will be available to folk. Okay, thank you very much again, Steffi. I think that probably covers it off. So take care, everyone.
Thank you, Julia, and bye, everyone. Have a nice day.
Bye-bye.
Bye-bye.
Bye.
Bye, thank you.